Hi everyone, today I want to talk about the report which recently came to my attention. This is a report made by Fidelity Digital Assets. Fidelity is a very big asset management company which controls trillions of US dollars. Signals report, and this report tries to summarize the signals for Bitcoin and Ethereum. Here we can see the summary of this entire report, which is 26 pages long. You see that for Bitcoin, they say that short-term outlook period of time is positive. The mid-term outlook, 1 to 5 years, is neutral, and long-term outlook, longer than 5 years, is positive. Absolutely the same idea for Ethereum. Here is the summary table for the Bitcoin. The short term, what do these guys look at? So first is price trading above the 200-day moving average? Yes, price is 27% higher, and they came to a conclusion that this is a positive condition for Bitcoin. The golden cross or death cross. Golden cross formed October 29, 2024. For those who don't know, golden cross is the point on this chart where 20 days moving average crosses 50-day moving average, and you can see it indeed happened in the end of last year. Let's move further. So price is bigger than realized price. This is a very interesting concept. They say the realized price is a metric that aims to capture the average cost basis for all current token holders. So what do these guys do? They look at the blockchain and all the addresses, and they consider that once Bitcoin moved from one address to another address, they snapshot the price of Bitcoin at that time. This is not very accurate approach, obviously. For example, I can move my own Bitcoins from my old wallet to my new wallet. This doesn't mean I sold to myself, right? Or Bitcoin changed hands. No, both of the addresses belong to me. So they say that currently Bitcoin's realized price is about 41,000 US dollars. It means that all addresses where Bitcoin came to last time, they in average received those Bitcoin at a price of 41,000 US dollars. We have 3 positive for the short term. For the NUPL ratio, they still see that Bitcoin remains in a belief zone, which is positive. Let's look for the negative. So they say that long-term holders are significantly adding to sell pressure. What else? 94 addresses are in profit, which could incentivize selling. And this is something I'm thinking about too. Like, Bitcoin made so many new millionaires in the world. And of course, if you see that currently 94% of addresses are in profit, you might think they highlighted, like they came to a conclusion that this is a negative condition. And of course, theoretically, it's negative. If we see that almost everyone already in profit, there is a high probability they'll start to exit the position, so they'll start to sell Bitcoin, which will lead to decrease in the price. However, I would say that we should account for specific of a crypto here. Bitcoin, mostly for the new generation of investors, especially institutional investors, this is not the asset that try to trade short term. Like, once they see the green, they already consider selling. The fundamentals which led all these investors to buy Bitcoin say that this is a long-term hedge against inflation, the hedge against the black swan. So what I would say that the fact that most of the addresses are already in profit does not necessarily lead us to a conclusion that they are about to sell those Bitcoins. I would say I think the Bitcoin I hold were purchased in average with average price of about 30 to 40,000 US dollars. As I was accumulating my Bitcoin during an extensive period of time, it's even hard to say for me what is the exact average purchase price of Bitcoin I hold. However, even though I'm in profits like for about 100 or 150% in the 5 years, so 5 years ago I started to accumulate my position, I'm not even close to exiting my Bitcoin position. But I would say that even though I already made a huge profit, and it is indeed a risk that greed will lead people to not take profits from these positions and eventually sell when the market will have a pullback. And market will definitely have a pullback. So all markets have cycles. It's impossible for any asset to grow continuously upwards without any pullbacks. So I'm ready for a pullback to 40,000 K price level easily. But to be honest, I don't see any better asset to rebalance my portfolio. If I exit from Bitcoin now and I would screen the market again, it would lead me to a decision to enter Bitcoin again. As good as this investment currently is, it's very hard to find alternative. We see that the price is in a healthy position, so it's higher than 200-week moving average. Monthly address metrics, neutral, users not demanded block space as much, however new addresses are increasing, neutral, new address momentum. I think what they are referring here, daily new addresses. Yeah, we see that daily new addresses dropped in the middle of 2024 and slightly rebounds until the end of the year. However, they're not even close to the levels of 2020 until late 2023. This might say that we not very close to a period when people will start using Bitcoin addresses as their own wallet for their daily purchases. However, it could mean that retail investors, they keep the Bitcoins with crypto exchanges, and crypto exchange has one big wallet where they keep all the customers' Bitcoins. Exchanges balances continue to fall. Users removed 8% of holding throughout Q4. They highlighted this as a positive change. So we see on this chart, this is the total number of Bitcoins held with exchanges. And we see that it peaked in the late 2021. And this drop after the bear market led by FTX collapse. And we see that the balance of Bitcoins held on exchanges continues to fall, which is logical. After seeing the failure of crypto exchanges, people lose the belief in centralized counterparty. They don't want to take the credit risk of keeping their Bitcoins with a centralized institution, which can go bankrupt due to intentional or unintentional mistakes, fraud, or whatsoever. So more and more people withdraw their Bitcoins from the exchanges. It's interesting that the number of newly created wallets drops. It means that older holders of Bitcoin, they withdraw from exchanges, but they do not create new addresses, as we see the number of newly created addresses decreased. So it might lead us to the conclusion that all the owners scared by all these collapses of crypto exchanges, and they already created their own Bitcoin address somewhere before 2024. And they sent that Bitcoins to that addresses, which also says that new coming investors, they still did not learn the exercise of how risky it could be to keep Bitcoins with the crypto exchange. Okay, so this is the short analysis of Fidelity Signals report. The general overall conclusion, they say that short-term positive, mid-term neutral, and long-term positive. I'm continuing to hold. My time period target is definitely more than 5 years. Stay tuned. Bye.